Good afternoon, and thanks for joining us today. We have a very interesting guest with us. If you've ever wondered what a forensic accountant does, today we're going to talk to Brian Trampe, and he's going to share with us a little behind the scenes and some interesting things that will help you get a better understanding of what a forensic accountant does and answer some questions and what you may need to know. So, Brian, thank you so much for joining us today and welcome.
Thank you. Thank you for having me.
So can you tell us a little bit about who you are, what made you get into this field, and just give us a little bit of background knowledge so we can get to know you better?
Yeah. Well, as you said, Brian Trampe, I work at Weaver and Tidwell, which is a public accounting firm. I actually did my undergrad in economics at UT Austin, and then after that wasn't sure what I wanted to do, what an economist, how do you even get a hold of an economist? So I got my master's immediately after that at UT Dallas in accounting, and then I started out my career at PricewaterhouseCoopers as an auditor for 6 years. And then when my daughter was being born, I decided that I didn't want to be an auditor anymore. You work, in the big four, which is PwC, Ernst & Young, Deloitte, and KPMG. You can work pretty crazy hours, especially during what they call busy season. So I knew that once we were going to have our daughter, I didn't want to work, all the time, miss 4 or 5 months of her life. So I came over to Weaver and Tidwell back in 2011, 2013, and transitioned over to their, what at the time was called transaction services. So I learned due diligence and valuation, some valuation for gift and estate tax. And then I left Weaver in 2013 and worked at a place called Farmer Fuquay and Huff, really with this Steve Fuquay, who had a tax practice for many years, and also that was in family law work. So the last 10 or 11 years, that's how I learned all my forensic accounting, family law knowledge. And then I came back to Weaver and Tidwell in October of 2020 to help grow their family law practice. We have someone in Austin and Houston, but they didn't have anyone in Dallas. So that's kind of where I'm at now. Still trying to grow our family law practice and continue to grow our forensics and litigation group.
So tell us, what does a forensic accountant do? What does he look for? What is the purpose of someone bringing in a forensic accountant?
Well, I can speak to a forensic accountant just in family law, but we've got at Weaver 20 plus people in our forensics and litigation group. So there are people that do all types of forensic accounting, like government investigation, school district investigation, city investigations, just any sort of misuse of funds. We have people that do that. Construction litigation, companies fighting over construction, you've got to quantify damages. But I work on all those things, but primarily I work on family law matters. And I tell people why you would need a forensic accountant in family law would be like 3 or 4 reasons. And the most common would be if one of the spouses owns their own business. I'm accredited in business valuation. So a lot of times, say you own your own business, there needs to be on the asset and liability schedule, which I could talk about a little bit later, but essentially it's just a listing of the parties, what they own and what they owe. And then you try to use that to, divide out the assets and liabilities. And one of the assets usually is, do the parties own their own business? That needs to be a value on there. So we do that. Another common issue of why someone would need a forensic accountant in family law would be tracing separate property. There's some separate property rules, meaning like if you owned a house prior to marriage, that would be your separate property. But what if you sold the house during marriage, then you deposited the money into a bank account, and then it transferred out to 3 or 4 other bank accounts. Well, you need someone like me to try to follow that, because it's essentially trying to prove your separate properties. Say you sold the separate property house, put it into a brokerage account, and it just, or a savings account, and it just sat there. Well, as long as we can prove that the money was put in there and that it sat there and it's still in there today, we could essentially prove that that savings account is your separate property, through tracing procedures. And then the last one, not as common, but it seems like it's become more and more common in the last few years, is called constructive fraud or waste claims, or hidden assets. So people, surprisingly enough, try to hide assets when they're going through litigation. They might transfer money out to a bank account that their spouse doesn't know about. And then the waste claims would be money spent on paramours. That's the legal term for like boyfriend or girlfriend, maybe drugs or excessive gambling. So those would be the 3 or 4 main reasons why someone would need a forensic accountant.
So going back to your second example, where you've got sole property and then marital property, and you use an example of somebody owning a house before marriage and then selling the house during marriage, and maybe he parked that money in a savings account, said he, but could be she.
Yeah.
Do you find oftentimes too that that money is actually taken from the sale of that property that was owned separate and then commingled with some marital assets, and then maybe it goes multiple directions? Maybe part of it goes to buy another house, part of it goes into an investment account, and that sort of thing. Is that pretty common?
Yeah, I mean, the most common one that I see is what you said. I mean, not too many people can just sell a house and then, not roll it into another one. Not everyone has that kind of liquidity to be able to buy 2 houses. So yeah, one of the most common things I see is someone owned a house prior to marriage, either husband or wife. They get married, then they want to, move to a different house. So they say, hey, let's sell the house you had. Well, as long as, say for the just example purposes, it's the wife. The wife had a house prior to marriage, then they get married, they sell it, a year into it, and then they put the money in, say, a savings account, and there's other money in that savings account, and then it sits there for 5 or 6 months. Then they look for a new house, and then when they buy that new house, well, a portion of the funds came from the savings, and then say they financed 50% of the house purchase, so that it could be mixed character. But you would have to trace the money going into that savings and then trace it going out. And then, like I said, it would be mixed character. The house that the marital residence could be like 50% separate property of the wife and then 50% community.
That's interesting. I do see a lot of people assume that once the party that has that separate property sells it and they buy something together, there's this assumption that you're now equal owners, even if some of that separate property came into that transaction.
Yeah, and then one other thing that I see a lot, and I don't know who all is going to be listening to this, but just to beware, it happens a lot. Wife owns house prior to marriage, they get married, then they want to refinance. Husband might say, hey, this is garbage, I want to be on the deed. Why do you have the house? And then somehow they talk them into it. They refinance, or just say they refinance because they want to take equity out. Well, you refinance, and almost always the realtors will have a deed. You're just signing, so your spouse will sign the deed. Well, a lot of times in family law courts, they'll deem that as you gifted half of your separate property house to your spouse. So then it'll be 50% your separate property, 50% your spouse's separate property. And then I see it all the time. People will say, well, I didn't know that I was signing this deed that was transferring, the ownership over. And a lot of times it's just like, sorry, I know there's a lot of people that didn't know that, but that's just the way that it happens when you refinance. A lot of times they make both spouses sign. So just beware. If you have a house prior to marriage and you're refinancing, be careful what you're signing.
I had a situation not long ago where the husband owned the house, and then they got married, and then later down the road the husband quit working and kind of became a deadbeat, and they went to refinance the house, and this is when rates had dropped so low, so they were refinancing to take advantage of that. And at the time the husband had no income, so they qualified on the wife. The loan was in the wife's name only. Now she gets added to title, and then several years later they go to get a divorce, and the wife thinks that she has equal ownership. And we had to have that conversation that she has interest in the property, but that doesn't necessarily constitute ownership. And then she had to work with her attorney to prove up what her investment was in the house. And I can imagine when you're having to go back in time several years, that can be challenging for an individual. Now, how does someone in your role, how do you get that documentation if it's kind of stale or old?
Yeah, I mean, unfortunately, I mean, most banks and brokerage, they'll hold on to those statements for, I can't remember the exact time here. It'd say 7 years. It seems like a lot of them keep them 7 years. If it's longer than that, unfortunately, if there aren't the right records that people have and the marriage has been a long time, you might just lose out on your separate property arguments if it's going to go all the way to trial, because these separate property claims are supposed to be proved within clear and convincing evidence. That's the standard but for mediation or settlement purposes, you could really decide to settle however you all want. So I tell people all the time, hey, if you don't have the account statements proving that you had a 401k at time of marriage, and you're just telling me you've got it, and all I've got is statements from the last 7 years, but you've been married 20, sometimes I have to say, hey, I'm sorry, like, there's really nothing I can do to help you. I can't just take your word for it. I mean, you could make the argument yourself, but hiring a forensic accountant and having like a testifying expert, I know already that we wouldn't reach the level of clear and convincing evidence. So I have to tell them, like I said, hey, you might want to try to settle and get some sort of estimate of your separate property, because at trial, I don't think you'd get anything.
And I would imagine that's pretty darn good advice to hear that early on.
Yeah, yeah. And some people get really mad. They say, well, that's crap. I had this account 10 years before marriage. And I'd say, well, then, like, how do I know that? How would a judge know that? How, other than you telling us? Because you'd be surprised too that people don't always tell you the truth when they're going through litigation. I hope that everyone I'm working with is always telling me all the facts, but sometimes they forget them.
True. We see that as well. So obviously someone going through a divorce, if they're working with an attorney, I'm guessing, I would imagine the attorney is going to be the one recommending the person who fills your shoes, who does the forensic piece of it. But what would you say to someone, if they're in need of that? What is it that they should prepare for, and what is it that they should expect out of someone functioning in that role?
What should they expect? That's kind of a hard question. I just would be aware of what attorneys you're working with, because there are some out there that have reputations of just, they incur a lot of fees and they do a lot of things to, you know, generate fees for their law firm, but not necessarily trying to help you resolve your, divorce in a costly and efficient way. So, it's a slow process. I've, especially since COVID, like things are really backed up. A lot of people, I get calls and they're frustrated with the process because they've got to send documents to the attorney, and then the attorney has to send me documents because of discovery purposes. And sometimes, if you're not working with the best attorney or they're really busy, I might not get the documents for a week or two. And then I'll get a call from a spouse saying, hey, I sent these documents. And I say, well, you know, I didn't get them. So, I would say be in communication with your attorney, with the expert, and trying to make sure that everyone's on the same page. That's what I try to do is, and then, like I said, be patient, because this is I know it's a stressful time, but these things don't move that fast, especially through court. If you're going all the way to trial, which I would not recommend to anyone. There's obviously situations where one spouse is being completely unreasonable and the only alternative is to go to trial. But that would be my main suggestion, is just be patient and get your referrals. The best way I'd say to find an attorney is not Googling it or something. Like, if you have someone that's gone through it and they like their attorney, you should use those, or get a recommendation from an interview a couple of attorneys and interview a couple of financial experts. Don't just take the word of the attorneys all the time, because you might not get along with me and you might, get along with another expert. So don't just pick and choose based on the D magazine top attorney or whatever, because sometimes those aren't always the best attorneys for you and financial experts. And a lot of times attorneys, they use the same financial expert. So you might think that you might get along with this one, and then they pick this expert, and it might not be the best experts. Just like anything else, there's good attorneys, there's bad attorneys, there's expensive attorneys, there's cheaper attorneys, there's attorneys that really their whole practice is around collaborative or resolution, versus other ones that their whole practice is, hey, I want to go to the courthouse and I want to litigate. So it's like, what do you need? What do you want? That would be I guess my advice. Having the experience I have for the last 12 years of going through some of these cases, that would be, just be patient.
Think that's good advice, because that's probably the one thing that we all lack when we're going through a divorce. We want an answer. We want it now. We want to know what the next step is and when the next step's going to occur, and then what happens after that, and how soon are we going to be done, and when can I start my life, and just a million questions about timing. So that, I think that's really great advice. Do you have any, like, a memorable case that was fascinating to you, or that maybe made impact?
Yeah, I mean, there's a lot, and one in particular, I couldn't think of just one specific. I mean, there's obviously some crazy things, like where I was saying hidden money. I worked on one where the wife transferred, like $1 million over to a Swiss bank account. That was, you don't see that all the time. A couple other where they transfer money internationally. Once money's transferred internationally, it's kind of hard to follow sometimes because our subpoenas don't work there. So those would be challenging. And then, there's just a bunch of people never seems to surprise me with, some of the decisions they make, like high-end executives flying in, high-end escorts and stuff, where I knew that stuff probably existed, but to actually see it happen, like, how do you have time to do all this stuff? And then there was one recently where it was actually I was on the husband side, and we went to mediation with the attorney. And the first thing we did is the mediator said, hey, the other side had an expert, and they said they want to talk to you first without the parties. And I'm like, okay. And they essentially were saying, hey, we see these invoices. I was supposed to value the husband's business, and we valued it. And they were like, hey, here's some expenses. We don't see where these are being paid for. And I'm like, what are you talking about? Okay, I'm sure he's got a logical explanation. We'll go talk to him and then come back. And sure enough, we find out he wasn't paying for them. They were just fake invoices, and they added up to be a lot, like hundreds of thousands of dollars each year, which is also not being truthful to the IRS, because these were on corporate tax returns. So, that was very interesting, because one of my questions when I'm valuing the business is, do you have any personal expenses going through? Do you have, and he elected not to tell me any of those things. Well, his wife knew about them. So then when we got to the mediation, she knew what he was doing. We didn't. So then we had the difficult conversation to tell him, hey, the valuation that you paid me to do is not really useful, because everything's fake on here. You're creating fake invoices. So yeah, it never surprises me the things that people do, especially when they're going through litigation.
That I would imagine that was an interesting case to be on.
Yeah. Yeah. Especially at the beginning of mediation, because, we kind of lost any negotiating leverage, because now we didn't know whether or not he was telling us the truth or not about anything. So, that's where I'm saying not everyone always tells you the truth.
And I think that's a big thing, when you lie about one thing or mislead, if somebody wants to avoid the word lie, they
Yeah.
mislead or hide things, then your own representation, your own attorney doesn't know what is true and what isn't true, and where to trust you and where not to trust you.
Yeah. Yeah. And that was that one for sure, was because if that would have happened at trial and I would have been up on the stand testifying, and like that, you never would have been able to find out what he was doing unless you did a full-blown audit, or he told you. So if I would have gotten up there and then that question came up, well, then my credibility would have just gone out the window immediately. And anything that I probably said after that, I'm not sure if the judge would have believed it or not, just because, if I wasn't aware of these fake invoices, well, then what else am I not aware of that he's telling me? So yeah, you just have to be careful, like I said, with people. As a forensic accountant in litigation, people will leave out stuff, leave out facts that they might know will hurt their case. Well, you've still got to be aware of these things, because if it gets all the way to trial, like I said, and you testify, it's your credibility on the line. It's not your clients. It's not the attorneys. Well, the attorney's credibility is on the line. But for me, like, my most valuable asset as a forensic accountant is my credibility. And if I lose my credibility, well, then, I probably need to find another job, because no one's going to keep hiring me if I'm not credible.
Yeah, and that makes perfect sense. So you have a very interesting work life, I guess you could say. I'm sure that all divorces are different, so I'm sure each case that you see is very unique. How would people get in touch with you or your firm if they wanted to engage your services?
Well, we've got I think our website, I think it's weaver.com, weaver.com. And we've got a forensics and litigation section. If you just Googled Weaver, Brian Trampe, my name would come up. My brother's name, Scott Trampe, might come up also. He's in the valuation group at Weaver. But that would be the best way. And then, my phone number would be on there, but that's 972-448-6961. And my email is Brian with an I dot Trampe, Trampe at weaver.com. And I don't charge for like consultation calls or anything like that. I think people call me all the time and I give them advice about whether or not, what attorney they need to refer some attorneys, or they tell me about their case and I say, yeah, I think you do need the help of a forensic accountant, or no, I wouldn't suggest. Like just one yesterday, it was a collaborative case and I was on the call with the two attorneys, and it was just the wife had a business that wasn't huge, and I was saying, hey, it probably doesn't benefit them to pay to have an appraisal of the business. They should just be able to hopefully come to a resolution of a number versus having to pay $7,500 to get a business valuation. So yeah, I don't charge for consultation calls, and I try to give everyone the best advice that I can, knowing what I know and knowing that I've been doing this for a long time now. And I've seen a lot of, I feel like even though every case is different, the same 4 issues are always there. Do you have a business that needs to be valued? Do you have separate property claims that you're trying to make? Do you have some sort of waste claim? Do you have a suspicion that your spouse is hiding money? Those 4 things. If you don't have one of those, the last thing is I get hired every once in a while to just, one of the spouses doesn't have any clue about anything that's going on with their finances. So that spouse, and I say, hey, I need that spouse, and their attorney will say, hey, we need your help going through all the documents, tax returns, bank statements, whatever, and just trying to build an asset and liability schedule of what these people own and what liabilities they have. So that'd be like five main reasons. If there's not one of those, you don't need a forensic accountant. And then the initial calls, like that's the type of information that I'm trying to collect is, hey, why do you think you need a forensic accountant? And then if I don't think you need one, I'll tell you, hey, I don't think you need one. You could, if your separate property claims are $10,000, well, then it's probably going to cost more to even hire us to prove the 10,000 versus just hopefully settling. But if your claims are $1 million, and they're at risk that if it goes to court, that you might not get any of your separate property confirmed as $1 million, well, then I'd say, yeah, you probably want to pay someone to prove it out, because if you can prove it out and the court agrees with it, well, then the court won't divide it. It's your separate property. You'll be confirmed your separate property, so the court can't, you can't divide it.
Well, that's really great information. I appreciate you so much today sharing all this insight and kind of the behind the curtains, I guess, stories of what you do. It's fascinating to me. I could probably geek out on it a little bit, but
yeah, it's definitely interesting. I tell younger accountants that one of the, I had no idea what this was when I came out of college. It's kind of like you either go to audit or tax. That's kind of what most people do. You go to the big, if you can, you go to one of the big 4, you start out in audit or tax. But in my opinion, I've been an auditor. I didn't like being an auditor. I think it's pretty boring, and no one really likes auditors. So I didn't like that aspect. I'm not the biggest fan of taxes. So, I always tell people I feel like I have found, in my opinion, like the most interesting accounting work that you can find. But it's stressful, going to court and dealing with people that are obviously going through tough times. It's not the easiest thing all the time, but I enjoy it. I feel like I finally have found something that I'm really helping people, even though sometimes they might not think it, helping them get through a difficult situation.
Yeah, and it is a difficult time, and it's important that people have good professional members or people on their divorce team to
Yeah,
help them through that difficult time.
for sure.
So thanks so much today for joining us, and we'll make sure that we include your information in the comments section. And just really appreciate knowing you and being able to collaborate with you here in the Dallas market. So thanks
Yeah,
so
well,
much.
thank you. Thank you for having me.
Absolutely.